If you're watching this video, it means you're a student. You're currently studying in school or college, that you get pocket money, but your dreams aren't quite fulfilled by it, like buying a brand new iPhone, some good clothes, a bike, or even a car. Why don't I give you a much better goal? Your career. A solid career, specifically designed for people like you, for the new generation, utilizing modern techniques and the complete A to Z of trading, through which we can truly earn significant money. If you watch this entire video from start to finish, you will definitely get a golden opportunity, and those dreams you had of owning cars and bikes, you can actually give them to your younger siblings and family members. If you're interested in this topic, then in this video, I will teach you the A to Z of trading, explained in simple words. You will need absolutely zero technical knowledge. I will explain everything in very clear and simple language. By the time this video ends, I will teach you how to execute a trade in a trading account, which is often called a demo account, without spending any money at all. When you get a positive result, how you can invest a small $100, $200, $300 and make 400, 500 or even 1,000 rupees a day, you will learn in this video. So if you are interested, let's begin. So what is trading? Trading is a digital business where we can make money by grasping concepts on our laptop or mobile. But this isn't how your father or grandfather earned money buying shares in Reliance and holding them for 5 or 10 years. This isn't that, brother. Here, we're going to explore a completely different approach to trading. But before I can delve into any specifics with you, there are 10 fundamental pillars of successful trading. If you manage to strengthen all these 10 pillars, then within the next 1 to 2 years, you will certainly achieve immense financial success. My name is Anish Singh Thakur Benin. I've made almost 10 crore rupees from trading. I've built a very successful career and future here. I've just launched my own trading floor in Dubai, and with a group of traders, I trade on a multi-crore capital, but I'm just like you from a normal background and I don't have any finance degree. I can teach you step by step. This channel currently has 2.5 million subscribers, and that's because my language is easily understood by everyone. I will teach you all the technical things in very simple words. Alright, let's begin to understand these 10 crucial pillars. The very first pillar involves understanding the basics. What exactly is trading? You bought a book, for example, imagine one on a subject that's hard to find for 100 rupees, and you sold that book to someone for 150 rupees. So 50 rupees was your profit and 100 rupees was your capital. Then you tried this business again. This time when you bought a book for 100 rupees, you went to sell it, but no one bought it from you. So you had to sell it at a loss for 80 rupees. A loss of 20 occurred, but it wasn't a loss of 20. 50 minus 20 equals 30. That's your net profit. This is the fundamental of any business. Here, we will trade digital assets. We'll make money by trading stocks, gold, cryptocurrency, anything just by pressing a button on our mobile phone. All these things will come up later. So it's clear, by buying and selling smartly and understanding the structure, you can definitely make money. So, trading is nothing more than buying and selling something. The second pillar you must decide is the types of trading. In this world, there are 3 distinct types of trading: swing trading, intraday trading, and scalping. I directly choose intraday trading for you because swing trading is a slower type of trading. You don't have enough patience or time, and it also requires more capital. Scalping is a trading method where a person repeatedly enters and exits positions, but again, you don't have the time to sit and watch charts, nor do you have the capital. You should directly choose intraday trading because even those who engage in scalping, ask them to show their statement for 1 month, 2 months, 3 months, or even a full year, and no one will be able to show it. No one truly makes any money. Less than 0.5% of people actually make money from scalping, but with internet trading, I can provide you with my FX book link. There is a specific link through which you can easily track all my profits. As I previously mentioned, I've earned 10 crore throughout my entire career. So in this particular account where I trade live on YouTube, how much profit is currently being generated? You'll always be able to keep track. No one else is going to give you this link. I'm providing it to you, so for whoever needs it. So this is my Instagram profile. Come over here and DM me the word link, and the link will automatically be sent to you. So in types of trading, you chose intraday trading. What exactly is this? Intraday trading means no matter how much analysis you perform, you won't take more than 1, 2, or a maximum of 3 trades in a single day. If you make a profit, that's it. If you incur a loss, that's it. You book your profit or loss and then you close the market for the day. That's how you do trading. So intraday trading is a specific type of market. Pillar number 3, types of markets. Now in this world, there are many different types of markets. For example, there is the Indian market, and then there's The American market offers a wide range of trading opportunities. Now let's move on to the platform itself. We'll be using a platform called XNest to facilitate these trades. XNest is a versatile platform that provides you with the chance to trade all these various assets. But hold on a moment. Is this Forex trading exchange platform actually legal here in India? So let's address that crucial point first. So Gideon, here's the thing. Whenever you directly transfer money from your own account to any Forex company, that is actually illegal. For example, here in India. But if you bring in a third party in between, which we refer to as T2T transactions, or if you deposit funds through cryptocurrency, then that becomes perfectly legal. Now in India, what happens is, until you've put something down on paper, it's not considered legally binding or valid. For instance, say you lend someone 10,000 rupees and they just disappeared. No one can do anything about it if you haven't formalized it with any paperwork. But if you have done the necessary paperwork, then something can certainly be done. Similarly, if you use crypto or this between your account and the Forex company's account, I'm giving you this withdrawal number. This will definitely help you. How you need to withdraw or deposit, then you won't face any problems. No rule has been broken in this process, but why do it? Why is this illegal? Let's understand this first. First and foremost, let me clearly state that it's not illegal in Dubai, nor in America, Australia, or Japan. It's illegal in India because the Indian government, as of today, has older generation people in power. They can't understand, they can't properly legalize crypto, they can't properly formulate any policy. They get annoyed because it negatively impacts the business of Indian brokers. And there are multiple reasons for this. I don't wish to elaborate further. Just use your own judgment. If it were truly bad, it would be illegal in Dubai, it would be illegal in America, and it would be illegal in Australia too. So there is a way, and when you work with small capital, there is absolutely no problem. If you increase your capital, you can come and shift to Dubai and start your career there. So what now? Let's begin this journey. Why did we choose this access platform? It's not just because it's inexpensive. Let's see what happens next. If Zerodha, an Indian broker, embezzles your funds, you can report it to SEBI. If a Forex broker scams you, who can you report it to? No one. That's why we shouldn't choose the cheapest but the best in the market, even if it's a bit more expensive. The thing is, XNest is also the cheapest in brokerage, and it's a 15-year-old company. In fact, I have a very good relationship with them. If you open your account through my link, there are multiple benefits for withdrawals and deposits. Plus, there's my application, Market Geniuses, which has many features. And I'll explain what it is further. And now, what's the biggest benefit of choosing XNest? Well, we get a demo account. That means by depositing $0, 0 rupees, you can learn how to trade in a real trading environment. The biggest benefit is this. Since you're a student, you don't have money. You can't take unnecessary risks. You need to achieve a positive return on investment, create a positive ROI. Once you achieve positive ROI in the demo account for 3 to 4 months, then you'll deposit $1, $2, or $500 as per your capacity, and we'll aim to make 500 or 1,000 rupees daily. Not every day, but we'll also lose on some days. But overall, we'll be positive. How? Let's talk. All right, so pillar number 5 is chart reading. Now to do chart reading, we'll have to come to it. Guys, on the website called tradingview.com, this website is very simple. I can make a very detailed video for you on this, but for now, I'll try to explain it in a few words. Just keep listening. Now, we can see a great many different things here. Here, you need to input BTC USD, or if you were to choose gold, then it would be gold. The entire concept, all of it will apply exactly the same way to everything. Right now, for this example, I've gone ahead and selected BTC. So what exactly do you need to do here now? You will need to come and set your time frame to 15 minutes. Some people might trade on a 5-minute chart, others prefer 50 minutes, some even trade on a 1-hour chart, and some just 1 minute. Say, by aapne it time mein repeat. You have to do 15 minutes. Why? You can do 5 too, but you're a beginner. You're just learning. For example, if you learn to drive a car, would you learn in a Ferrari, a Lamborghini, or a Wagon R? It's better to learn in a Wagon R, so if you crash, it's not a big deal. That way, the process would be a bit slower and safer. You'll have fewer losses. I promise you that if you follow this, so let's begin. What people do is, by rushing things, they're spoiling their own reputation. Older generation people did not trade logically. They traded emotionally, just rushing because they wanted to trade quickly. If you are a student, you understand you are doing a course. How much time will that take? 1 year, 2 years, 3 years? It will take a lot of time to finish a course and get a job. So I am choosing 15 minutes for you so that it is slow. Now let's move on. After choosing 15 minutes, we will see a chart like this. I'll show you. If I set this to 5 minutes, the chart will change. So you start trading on the 5 ticks from push the pem. So for the 15-minute chart, now for chart reading, you must trade based on 2 key concepts: market structure and liquidity. What is market? Again, it will be done. I can release a full series on this video or 25,000 likes. Whichever target is hit first, and I'll put out the series for you. So now with groww and chart reading, we need to use two things, market structure and liquidity. Let's say I've put the chart in replay mode here because as I'm making this video, the market is closed. Bitcoin doesn't close on weekends, but it does slow down with lower volume. So now what is market structure? Just check where did the market turn from. Here you can see the candles. Some are green, some are red, green, red. I can make a detailed video, but for now, just know this. Green means up, red means down. Now, the market took a turn from here. It kept turning. It took a turn from here, a turn from here, a turn from here, a turn from here, and from here. So what you need to do is draw lines on these points. How are lines drawn? Simple, okay, you'll come over here and you'll see the line. You'll choose any horizontal line and then you'll start drawing lines. We've drawn a line here. So we've placed the line right here. From every point where it bends, you can draw a line. I've placed a line right here. All right, for teaching purposes, I'll use a rectangle instead of a line to make things easier. I've placed a line right here. Okay, I put the line right here. Yeah, put the line right here. All right, so now you can do it. This was the very first thing done after drawing this line. After placing this line, I then defined the market structure. The initial step in chart reading involves defining the market structure and creating these kinds of lines. These specific lines can be referred to as demand zones or supply zones. However, it's not entirely essential to know every single detail. All right, now we need to trade liquidity. What exactly is liquidity? Liquidity essentially means where is the liquidity means money. Where is the money located? I've just opened my personal Axis account. Okay, the market is currently closed, so the Amazon market is shut, but Bitcoin should be open. So I will show you how to place a trade here. Then there's an open trade. Crude oil has been bought due to war tensions. You will get to learn all of these things later. So I came here, and after that, if I place an order here, for example, I'll shift this to 15 minutes as well. The market is open, and now let's say I click on buy here, and I try to buy one lot. Okay, it's telling me it will cost $200 to buy one lot. I bought it. Look, for example, I just bought. See, a position has opened, BTC has now opened. I opened a position, which means that to open a position, I have to pay money. So money equals position. Now this very open position, I am closing it now. Now this open position, let's say I've drawn a line here, and the line I showed you, I've drawn it right here. Now look, there are two types of orders here, market and pending. Now I'll show you liquidity, the one I mentioned on the chart. Do you know that there are many orders placed above all these lines? That means liquidity is there, liquidity is present. And I'll show you exactly what I mean. Suppose I want to place an order. See, pending. I want the market to come up to this spot, then I'll buy it. Or for example, if the market comes here, I'll buy. Okay, if the market drops a little, I want to buy. And I've confirmed the buy order here, one lot. So what do we have here? Buy. If the price now keeps falling below this level, like I've set a limit here, I'll also put a line here. If the market turns from here, my order will automatically be placed. In your account, you must be seeing it. But there are so many invisible orders, meaning if the market truly comes, my trade will automatically execute. Now I am deleting this. So in all these places, liquidity, meaning orders, are already placed. Now to place those orders, money is required. So liquidity equals open orders, which equals money. So guys, there are primarily two distinct types of liquidity we're discussing here. External liquidity and internal liquidity. External liquidity essentially is when you observe the very highest and lowest points of any market structure. These are what we define as external liquidity. And then the other points which are not situated at the absolute top or bottom of that structure, we designate as internal liquidity. Trades based on external liquidity are usually more reliable. Trades based on internal liquidity are also quite good, especially if we get 2 or 3 touches at that point, then it's fine. So now let me do one thing. I've taught you 2 important concepts, how to design or draw market structure and what liquidity actually is. So now let's move on to the next pillar. The next pillar is trading strategy. We are using the simple trading strategy, liquidity sweep. We had understood liquidity and where we understood it, external, internal. Now I've replayed the market because I can't fast forward it that much right now. So I'll start here. Now, look what happened. The moment the market broke through my designated level, our specific trading strategy is what we call a liquidity sweep. What exactly does liquidity sweep mean? It means whenever the market breaks our liquidity level for 15 minutes, look like a many were made. See that green profit is coming in, $1, $2. Can you see? So yeah, like this, I close it in profit here, for example. To show it artificially, I pressed the button. $1 profit is nothing. So we can sell, we can also buy. If we make a buy, then when the price goes up, we will make a profit. When we press the sell button and the price comes down, we will make a profit. So what did we understand here? Look, if the market now enters this liquidity level, but remember the time frame will be 15 minutes and I need a red candle, either with a good body or it should have that thin area, which is called the wick. I need a wick on the upper side for selling. For buying, look, I've placed it right here in front of you. Do you see it? Wait, you must use this candle. Now you'll say, sir, make a series for students like chart reading for students, technical analysis for students, psychology for students. Then I will make the whole series. As soon as this video reaches 25 with the district bits 25, between 5,000 likes or crosses 10,000 comments, I will launch the complete series. Let's see if you're interested. So like and comment what you've understood from this video so far. Regarding comments, there's a giveaway I'll announce at the very end of the video. So keep listening carefully. Okay, let's take a look at the next candle now. Up until now, we've received a pretty good candle. See, its body is quite long. And so we have to make a sale right here. We need to sell. How do you press the sell button? I have to come here and press the sell button, sell. And where do I place my stop loss? I've confirmed one lot. I need to sell. Now stop loss. Whenever you take any trade, there is a topic, a pillar called risk management. We'll talk about risk management later. But let me tell you, the most important thing in that risk management is the stop loss, which means if this price goes up now, then get me out of the trade. So what will happen now? I'll come here, I'll double click this, I'll click on stop loss and look, the stop loss has appeared. I can set this up right here, just like this. I can hold it like this, then set it, and then I can modify it. See? My stop loss has been placed now. Now I'll come over here, click on this specific spot, and then I'll double click. All right, I'll click on take profit. The take profit bar has appeared below. See here, I'll grab it and set it wherever I want. Then I'll modify it. So my orders are automatically placed. Now this will also create liquidity, guys. Now the stop loss might get hit or the target might get hit. Here, profit is running in dollars, $7. So if if I were to close this right now, it would be at $33. This is how an order is placed. I just showed a random point where an order gets placed. Now look, what you need to do here, you need to come here and click on the short position. What was this? This was the sell tool. It's a sell tool. And this is a buy tool. You clicked on the sell button. You kept your stop loss above this level. Where to set the stop loss, we'll discuss in a bit. This was your trade. And this is what we call a liquidity sweep strategy. This is the particular way the strategy operates. If we apply it, then right here, finally, our target was hit. Okay, you saw it. Why did I choose this here? Why did I choose this as a target? Because the market had reached this point. So this is how you can trade this. Now, next time when the price, the line I've drawn, let's see when the price reaches it. On the 15-minute time frame, a line I've drawn, now I've found another liquidity level, this one. I'll call that level external liquidity. You need to keep executing your trades in this fashion. Let's observe where the next trade will be made. Okay, look, it's formed. Okay, we were supposed to buy here if we had gotten a green candle, but the market didn't give us a proper green candle. The photo I showed, right? A green candle like that should have formed, but it didn't, so the market went. Now, are there any other liquidity levels below? Let's go and check the past. So we see that, okay, there was a liquidity level here. So we'll come to it and draw a line. All right, we'll draw zones like this, or one is sufficient. Now, if the market closes above this, we will buy. I don't know if it will go up or down. I'll click up first. Okay, it's done, guys. We should buy on this green candle. We'll buy on this, okay? And we place a stop loss because the candle size is quite large. So we have to put it here. We'll consider this liquidity level as our target. Here, a 1:2 ratio is visible. Now let's see, maybe it'll hit the target, maybe the stop loss, I don't know, because okay, it hit the target again. There will be stop losses too. It's not like that. So this is the strategy, okay? So here I've directly shown you on the chart what the strategy entails. And once more, I'll demonstrate this here for you again. Look, whenever a market structure forms here, it creates a liquidity level. If the price goes below this specific level and a green candle like this forms, a clear green one, then you need to execute a buy order right here. Understood? There are two options. Either the price closes properly in 15 minutes. I'll show an example here on the screen. It went down before closing, then formed a wick and came up, creating a green body by the close. This will also be called a liquidity sweep. You would enter at both these points. So, liquidity sweep is an excellent strategy. Look, like all these profits are visible. See this trade, see that trade. Profit has been booked in all of these. You can consider the following the liquidity sweep strategy. In this particular trade, I took it live on YouTube. I posted some of these trades in my community, which is called Market Genius. I have shared quite a few trades in the Telegram community, so make sure to join the Telegram community, which is completely free of cost. This is an application called Market Genius. If you have my access referral, there's an option called Live Trade where I provide premium trading guidance. I directly provide the trade recommendations. So there's no need to specifically go and take a course or purchase anything from me. You directly get live trading data. You get the market analysis and news as well. It's a great app. It's thought up, so install it and check it out. Because I go live and share my trades. Hit the subscribe button now, and if you press the bell icon, you'll get a notification when I'm live. In live sessions, you need patience. I can give you trade entries on Telegram or through other channels. But once you're in a live session, you need to hold your position. So you'll also learn the most difficult parts of trading. So follow this one strategy. Now look, you'll find 10 more strategies in this world from different places. If you start working on all of them, you won't be able to make a single rupee. Your mind will get messed up. You'll become a scalper. Don't be a scalper. Become an intraday trader. Just because you're hot-blooded and you'll struggle, you won't learn anything from the market. No money will be saved. Pillar number 5, chart reading is done. Pillar number 6, our liquidity sweep strategy is also done. Let's move on to pillar number 7. Now let's look at the sessions. There are 3 main ones: Asia, London, and New York. Asia specifically refers to Japan. When I explain it from India's time perspective, it's very early morning. There's quite low liquidity, few trades are available, and good trades are also hard to find. So then come the London, or basically the European session. After that, the New York session begins, but if we go into detail, you can just remove Asia entirely. You aren't supposed to trade there, I'm telling you, because you won't find good trades there. You'll pick from 3 sessions. London, which runs, say, from noon to around 6 or 7 in the evening. Then there's New York from about 6 in the evening until midnight, so the two overlap a bit. What does overlap mean? It means both sessions are open at the same time, so market activity and volatility increase during that period. From 4 p.m., the pre-New York session, and the London close until 8 p.m., meaning 4 to 8 is the highest volume time. So if you want, choose one of these slots, 12 to 4 or 4 to. If you can sit for a long time, that's fine, but time is limited, isn't it? That's why I'm telling you this, from 4 to 8 or from 8 to 12. I'll tell you, no matter which session you choose. You'll notice that some targets have already been achieved before your arrival. If targets are met again after you've gone, you will always remain unhappy. So, the most important psychological point here is this: whatever trading session you choose, you must accept the fact that no matter what you pick, something will inevitably be missed. Trading is exactly like that. It's like walking into a bank and they tell you, son, take all the money you want. You've taken as much as you possibly could, and now you have absolutely no more space left to carry anything. You walk out. Will you cry then? Oh, there were millions inside. I could only bring back thousands. It's like that. You'll never be satisfied. So, trading is like walking into a bank, but there are only 2 hands. So just like that, you pick any session. I would suggest that from 6 in the evening until 10 or 11 at night is a really good time. You can choose that. If you are free during the day, you can trade from 12 noon until 4 or 5 in the afternoon. But you shouldn't be trading all day long, 12 hours, 24 hours. There's absolutely no point. Let's go to pillar 8. Pillar 8 is risk management. What does that mean? Risk management means you must know how to properly set your stop loss and target. The tool was PLT. This is your stop loss, and the red area represents your target. So where exactly should you place the stop loss between these points? The first and foremost, remember, if it's a good thick candle, you must always place your stop loss right below that candle, because you are currently trading on a 15-minute time frame. The entry candle is small, so you'll place it slightly below the swing low. Where should we set the target? Keep it simple for you, a 1-to-2 ratio. If your risk is $10, your reward should be $20. First, you're trading in a demo account. It's free. But later, when you trade, you'll trade with $100. You'll trade with $200. So you'll risk $3 or $4. You'll set a target of $10. Okay? So this is how your trading is going to work. So I'll tell you some simple math. Let's say you took 10 trades. You didn't get much out of it. 5 were profitable, 5 had losses. If you profit in 5, making $10 profit, that's a $50 profit. And if you lose in 5, that's a $25 loss. So you still have a $5 profit. When we discuss this, you need to take double or even triple. 1 to 3, you'll be doing that later. 6 months from now, you'll first be doing 1 to 2. So the 8th pillar, risk management, is extremely important. Remember that. The 9th pillar is psychology. The most important psychological principle you need to understand is this: as a student, you must never ever risk your college tuition. Never ever take a loan. Are you in the learning phase, baby? Never get caught up in anything. Otherwise, I'll tell you my personal story. I also started trading, had some profits, some losses. Overall, I am in a loss. Still, I'm excited for trading. I don't know why, but don't you do this, and don't ask people for money out of excitement. I'd either put much from a friend thinking that more money would mean I'd make a much bigger profit. It backfired, guys. Instead of more cash, I just had a bigger loss. And when it's someone else's money, you get so stressed, right? Oh man, what if you used your college fees or money for the house or someone else's cash meant for something else entirely? Oh my goodness, trading is already a mental game. You know, it takes time to achieve success, so don't rush and try to cheat. You'll die from stress. Then somehow I returned his money. I swear on my friend, I won't take money again. No. Today, I've become so successful. So many people want to give me money. I don't take anyone's money, so I could get 100, 200, 1,000 crores. Maybe 1,000 was too much, but I can easily raise 100 crores. I don't need it based on my face value, brother. My 5, 7 crores are enough for me, brother. I'm making money from them and living a good life. I don't want to take on too much stress. Yeah, you must establish the first psychological principle. Don't ever ruin your career by taking any excessive risks. The second point is that our families taught us that losing is bad. Losing is bad, you won't lose, son. He'll fight, he'll beat, he'll win, but he'll lose. What utter nonsense. In trading, you absolutely have to experience losses. You'll lose 3 or 4 times out of 10. After that, you mustn't get angry and start fighting. To avoid overtrading, psychology number 2, losing is okay. Psychology number 3, as a student, you'll understand this best. After getting your degree, giving interviews and completing training, that's when earnings begin, so give it time. Now you'll say, I've watched this video, I'll finish it now, I'll start earning money from tomorrow. To bide titi, ashbanpi. No, brother, you will trade in a demo account first. For at least 2 or 3 months, you must achieve positive results. Only then will you proceed to make a deposit. Not a large amount, perhaps 100, 200 or 300 at the very most. And subsequently, you will risk only and exclusively 5. That's 5% of your total account value. You must never risk anything above that. In fact, you should always risk even less than that. Now, how exactly do we calculate this? Look at the market. As you're aware, I just explained it. Hey, here's a calculator. If you click that you want to trade gold and you need to risk a certain amount of dollars, you can use this calculator. Install the smart calculator, especially for the young generation. It's free, man, and it's very easy to do. Don't place a single trade without using the calculator. Now, let's talk about the 10th pillar. Chance and traps. De ornator antin sextine. So the biggest trap is thinking that I should immediately drop out of college because I too is saying I succeed.